Hello and good morning. You're tuned into Market Cafe. I'm Ankita Saxena, and in the next half an hour, I'll take you through all of that transpired on the global markets, the geopolitics, and of course, the cues you need to watch out for before the start of the street. So let's get going with the biggest cue that's coming in from the US markets. Of course, we had the Fed meeting, and the interest rates have remained unchanged. They remain between 3.5% to 3.75%. But what was the surprising part here? Now, this was Kevin Warsh's first Fed meeting after he took over the office as the Fed chairman. And the interesting thing is that Kevin has, had always opined on the rate cuts, but he had a rather hawkish stance this time round when he came out with the commentary. In fact, he reiterated on his commitment to price stability. In fact, inflation is something that he spoke about and had a rather hawkish stance on it. Did not see the rates change. We do pencil in a rate hike perhaps later in the year. So a hawkish Fed stance is what we saw coming in, and on account of the rising inflation and, of course, strong labor market as well, has lended itself to the rates remaining unchanged and perhaps a possible rate hike in the future in the year. But also the other thing that happened with Kevin Warsh taking the office is the fact that he refused or abstained from submitting a dot plot. Now, remember, it has been a culture with the Fed that they submit a dot plot once the meeting is over. But Kevin Warsh has abstained from submitting a dot plot, saying that hampers and hamstrings the future Fed policy, and he would like to go data by data, and that's how he wishes to progress. And dot plot is something that he has refused to give. But besides that, we also had the two-year Treasury yield that spiked up 14.4 basis points on account of the fact that there could be a rate hike later year, and the 10-year US yield is also sitting at around 4.46% on account of the fact that there could be a possible rate hike later in the year, and there was a hawkish stance coming in from the Fed chair. We do see US markets that saw a cut coming in on account of that. We have Dow Jones that was trading down almost 1%, 500 points downtick coming in on Dow Jones. S&P 500 down 1.2%, and NASDAQ also trading with cuts of 1.3%. So US markets saw cut all across on account of a hawkish stance coming in from the Fed. But let's talk about the oil prices as well. Oil prices also saw a slight tick up on the fact that Trump has threatened to bomb Iran if Tehran doesn't behave. We do see crude stick up a little bit, but nonetheless, it's not a big reason to worry here, because as of now, we do see it cooling off, and Brent is now down 1.5%. It is still sub $80 per barrel mark. 78.4 is where it's sitting at, and WTI is also right now cooling off with cuts of 1.6%, and that's sitting at $75.54 per barrel. So oil is near its lowest level since early March, and it continues to hover around that, even though we did see a slight tick up coming in last night on account of those statements coming by President Trump. But let's take stock of how the Asian handover is also looking like right now. It's a mixed day of trade coming in. We do have ASX 200 that's trading with cuts of 0.3%. Hang Seng that's down 1%. Shanghai is absolutely flat with cuts of just 2 odd points. But Nikkei is the one that's doing well in the trading session. That is gaining with gains of 1.7% right now. In fact, if Nikkei hits 71,000 for the first time, it's a fresh record high is where Nikkei is sitting at. And look at the implied start to Nifty, a very muted start, albeit in the red. 32 points cut coming in as far as Indian markets is also concerned. The start can be expected to be rather muted. But that's how largely the market is shaping in, and what you can really expect from the Indian market start as well. The United States and Iran have formally signed a memorandum of understanding aimed at ending hostilities and launching a roadmap towards a broader peace agreement. The deal includes the immediate reopening of the Strait of Hormuz, a 60-day negotiation period on Iran's nuclear program sanctions, waivers for Iranian oil exports, and a proposed $300 billion reconstruction and development framework. Both the sides have confirmed that the agreement was signed electronically, with negotiating teams set to meet in Geneva on Friday. Let's listen in.
It's signed, yeah, signed. To sign it, it resigned. And to sign it.
And after almost a year of ups and downs, PM Modi and the US President Donald Trump met on the sidelines of G7 summit in Evian in France. The meeting was closely watched and came on the back of an attack on Indian crude ships and trade talks. The meeting between the two leaders aims to accelerate the trade negotiations. When questioned on the trade deal, Trump said that they are very close to the deal and called Modi a tough negotiator. What's next for India and US relations after the meeting? We will be now joined by Atul Kishrap this evening to discuss more. But before that, let's listen into what Trump had to say.
एक्सेलेंसी, आप और हम सभी इस बात से सहमत हैं कि हॉर्मुज का खुला रहना एक वैश्विक अर्थव्यवस्था के लिए बहुत ही अनिवार्य है.
Mr. President, you and I agree that keeping the Strait of Hormuz open is vital for the global economy.
एक्सेलेंसी, हम हमेशा कहते रहे हैं कि फ्रीडम ऑफ नेविगेशन सुनिश्चित होना चाहिए और इस पर हम सब ने मिलकर के बल देना चाहिए.
India has consistently emphasized the importance of ensuring freedom of navigation, and we should work together and place a particular emphasis on that.
एक्सेलेंसी, आप जानते हैं कि मैरीटाइम ट्रेड की दुनिया में भारत के लाखों सी फेरर आज दुनिया के अलग अलग समुद्र में अपनी सेवाएं दे रहे हैं, विश्व की प्रगति में बहुत बड़ा योगदान दे रहे हैं और मैं समझता हूं कि उनकी सुरक्षा भी उतना ही महत्वपूर्ण है.
He's a very tough negotiator. He's one of the toughest, actually. So you look at this man. I'll give you a lesson. He's the most beautiful-looking man. He looks so nice. He's like an angel. But actually, he's as tough as he's a killer. I don't want to. He's a killer. He's as tough as they come. But he looks so good. So he gets you by surprise. But there's few people like this. People say he's such a nice man. I said no, he's very tough. He's a trader, and he loves the Indian people, but he also loves the USA. We had Howdy Modi in Houston, remember?
And
the stadium was full. I think India plays a big role in everything. As long as he's the leader, India's going to play a big role. I think it's a great relationship. I can tell you this, without having a contract, we don't have a contract, you have to write contract, but if they were attacked, we would be there to help them.
And how
Is that a good statement? Okay, come here, man. If anybody attacks that man, we're going to be there. Now, if there's a new leader, I'm not sure about it. If there's a new leader, I don't know about that. But if they're attacked and he's the leader, we're going to be there to help.
All right, that's Trump talking about how tough a negotiator is Prime Minister Modi, and we are expecting a deal to come out anytime soon. Now, the India-UK Free Trade Agreement will come also into force on the 15th of July this year. The Commerce Ministry said that the Comprehensive Economic and Trade Agreement was inked on the 24th of July last year. My colleague Sumita is now joining us with more details on what can we expect.
That's right. Big news coming in on the front of the India-UK CETA agreement. Both the countries have announced that the FTA between both the sides is going to come into effect on July 15th. In fact, India and the United Kingdom signed the CETA agreement in July 2025. However, that deal hit a roadblock regarding UK steel quotas and its CBAM, that is the carbon tax that the United Kingdom has. In fact, after that, it was to come into effect earlier this year, but due to these very hurdles, it could not be operationalized or implemented. In fact, with respect to that, Commerce and Industry Minister Piyush Goyal held a virtual meeting as well earlier this week with UK Secretary of State for Business Peter Kyle. He was here along with his trade team here on 2nd June as well to sort of iron out some of these issues. And of course, now that big announcement has come about. Now, as far as the India-UK CETA agreement is concerned, UK will be eliminating tariffs on 99% of Indian goods. In fact, there's going to be easier movement for Indian professionals to the United Kingdom. There's going to be a double contribution convention in Social Security. Automotive tariffs are all going to drop from 100% to 10% under a quota. In fact, cosmetics will also see tariffs of up to 22% eliminated. And of course, there will be stage reductions in several sectors, and that includes Scotch whisky as well. There is also a feature with respect to services, liberalization for ITs and other service-oriented sectors. On steel particularly, on which India had concerns, 85% of India's exports are now out of these steel measures. So that's a big win that India has secured. Major beneficiaries of this agreement include sectors like textiles and garments, leather and footwear, gems and jewelry, auto components, marine products, and several other sectors.
Moving on then, the US Federal Reserve has kept the interest rate unchanged at 3.5% to 3.75% in Kevin Warsh's first meeting as the chair, but delivered a more hawkish message. The Fed removed a language suggesting a bias towards future rate cuts, and policymakers no longer project a rate reduction this year. Updated forecasts point to the possibility of a rate hike, while Warsh declined to submit his own rate projections and announced a review of Fed's communication framework, including the widely watched dot plot. Listen in.
The committee decided to maintain the target range for the Fed funds rate at 3.5% to 3.75% in support of the Fed's dual mandate. I am pleased to report that members of the FOMC are unambiguous and unanimous. This committee will deliver price stability. In the median projections, real GDP rises at 2.2% this year, 2.3% next year, and total PC inflation runs at 3.6% this year, 2.3% next year. I reviewed the dot plots, and when I saw the submissions, I noted that all the submissions were coming in with pencils, you know, those kind with the big erasers. That's to say that I think my colleagues around the table, when they submitted their dots, understand the world is changing quite quickly. And they didn't feel bound by them 6 weeks from now or 6 days from now in the event that their circumstances change. I'll note a couple other things. What I heard around the table was, as they submitted their modal forecasts, to be clear, weren't this was more likely than not. This was more likely than their other scenarios. So I didn't hear tons of conviction. What I heard was the kind of humility that I think we should have. I did not submit a dot. For me, it's not helpful in the conduct of policy. I suspect by year end, there'll be a review about communications broadly, press conferences, dots.
All right, with that, it's time for a quick breather. Don't go anywhere. But before that, let's talk about the double line capital CEO, Jeffrey Gundlach, who says that the Federal Reserve Chair, Kevin Warsh, has delivered a far more hawkish message than the markets were expecting. According to Gundlach, Warsh has made price stability his central objective, reducing the likelihood of aggressive rate cuts. He believes investors expecting an easy money under Fed under Warsh may need to rethink that view. Now, Gundlach also said that Fed chair has effectively tied his credibility to bringing inflation back to 2% target, making long-term treasury bonds more attractive. And well, with that, we'll slip into a short break. Don't go anywhere. We'll be right back. And after the break, we'll get you all the cues you need to watch out for before the start of East Street. Welcome back. You tune into Market Cafe, and back home, one of the most awaited IPOs will soon hit the market. The National Stock Exchange, or the NSE, that has filed for the DRHP for what could be one of India's largest IPOs, with an estimated issue size of 25,000 to 30,000 crore rupees. The filing marks a major milestone after years of regulatory hurdles linked to the co-location controversy. My colleague Anurag Joshi is now joining us with the details of the IPO.
NSE has filed the draft offer document for its proposed initial public offering with the Securities and Exchange Board of India and the stock exchanges. NSE will offer almost 149 million shares for sale in the IPO. The sellers are State Bank of India, which is the second biggest shareholder in NSE, and other local financial institutions such as Bank of Baroda and Stock Holding Corporation. The foreign investors in NSE that are offering their shares for sale include CPPIB, which is a Canada Pension Plan, and Aranda Mauritius will also be selling their shares. The insurers selling their shares are General Insurance Corporation, New India Assurance, National Insurance, and United India Insurance. The shares offered will be 6.02% of NSE's total shareholding. And once the IPO is completed, the shares will be listed on the Bombay Stock Exchange. NSE has been preparing for this IPO for years now, but it's only in January that SEBI finally gave its no objection certificate to NSE to go ahead with the IPO. Subsequently, on February 6th, the NSE board approved the IPO, and on March 12th, NSE appointed 20 banks. The NSE also sent a letter in March to its shareholders for a share tendering exercise, and the response for that was overwhelming when the deadline for the share tendering expired on April 27th. Separately, in April, a high-powered committee of the Securities and Exchange Board of India approved the settlement of 1,800 crore rupees in the legacy co-location matter, though SEBI is yet to take a final view on the matter.
All right, let's move on and talk about all the stocks that will be in focus in today's trading session. For that, my colleague Meryl is now joining us with all the stocks and news. Over to you, Meryl.
Yes, we've got a whole host of stocks in focus today. Let's take a look at a few of them. Starting up first with the alcohol and textile stocks, which are expected to be in focus after the India-UK trade agreement is set to come in force starting from the 15th of July. Now, this is going to be giving Indian exports a zero duty access on nearly 99% of tariff lines, which is a key positive for export-oriented sectors, among which the textile and alco-bev space are also in focus. Now, banking stocks as well are in the spotlight today. The RBI has temporarily withdrawn its interest rate ceiling on fresh FCNR-B deposits, which is expected to aid foreign currency deposit inflows and improve banks' funding access to overseas flows. On the flip side, BSE is seen under pressure, and that's because NSE, or the National Stock Exchange, has finally filed its DRHP in one of the initial steps toward its much-awaited IPOs. Now, this is going to be raising expectations of intense competition among the two exchanges, which could be seen eating away at the premium valuation that BSE currently garners in the market. In focus today also is Gravita India, after its Mundra-led recycling plant has received LME accreditation. What this does is allows the company's lead products to be delivered at LME-approved warehouses all over the world, which is only going to be opening up access for the company towards international customers and markets. And finally, Railtel Corporation has bagged a government order worth 52.5 crores for setting up disaster recovery IT infrastructure. So yes, these were a few stocks that were expected to see buzzing before today's trade.
All right, Mel, thanks so much for joining us. With that, let's move on to Shesha, who's standing by with her list of stocks that will be in focus. Take it away, Shesha.
Well, yes, first up, let's put the spotlight on RVNL. The stock will be in focus on the back of an order win, where the company said that they've received an order worth about 967 crore rupees. Vedanta Power, recently listed demerged entity from Vedanta Limited, has said that they are looking to enter into different business verticals. They are eyeing hydro, battery energy and nuclear energy for future growth, so keep an eye out on Vedanta Power as well. Kirloskar Ferrous, meanwhile, they've received an international order worth about 118 crores. Keep an eye out on this. We have Bosch Home Comfort. The stock will be in focus on the back of OFS, where promoters are looking to offload about 8% stake in the company via an OFS, which will be open for non-retail shareholders today. Keep an eye out on two other counters where lock-ins expire. One is Inventurous Knowledge Solutions, or IKS Pharma, and the other is One MobiKwik, where about 21% equity lock-in opens today. So perhaps some bit of selling pressure could be seen on both these counters.
All right, Shesha, thank you so much for joining us with that. But with that, we are completely timed out in this edition of Market Cafe. I'll take your leave. Thank you so much for tuning in.